Hey folks, Dan Free here, the rate update. Today is March 4th, 2021. What happened? Federal Chairman Powell didn't do any of us a favor. Don't go away, I'm going to show you why. Oh boy, what a day. I'm sorry I didn't post yesterday. I had a conference that I spoke at. I met with realtors, did some videos with realtors. All that will be posted next week. Thanks to all those people, and thank you to you guys for watching. And the response you guys are giving us is fantastic. Our views are skyrocketing. And obviously, you guys are liking the videos. I greatly appreciate it. Please give me a thumbs up, subscribe down below, click the bell so I post a video when you get an alert. Here's my scope of going into the week. Everything was contingent upon what the jobs report would come out on Friday. Okay, it's been a bloodbath all week. So I won't say all week. Yesterday, today, and tomorrow we'll probably see an uptick. So hopefully there's a silver lining in this thing. So here, let me progress through what happened yesterday. Yesterday, Adp Jobs Report came in. Half the time it's completely wrong. But because of their report wasn't good news, basically said that the employment wasn't there, it still kind of spooked the market, okay? And mortgage-backed securities went down, I think, like 40. The assumption was, again, it was an overreaction, and the ADP report came back, and it wasn't too bad. One thing that popped out, and it's rumored through the system, some news organizations kind of picked up on it, and Wall Street and everybody else picked up on it, and you might not have, is now there's tricklings of another yet stimulus package going to go through. Guys, we can't just keep giving money away. It's going to completely screw up the whole system. I get it where people are hurting. But you keep spending or sending out money and printing money is going to screw us all in the long run. Okay, so basically, and I get where people need help, but we're way overdoing it this time. All right, so here's what's going on. That spooked the market yesterday because there's like, we're going to do another possible stimulus package. The politicians are great. It'll vote. All these people will vote me in next time. Well, the demographics that they need. But everybody else, we're going to get hammered with inflation. Everybody's going to get affected by inflation. It's going to lead to higher mortgage rates, higher car rates, higher credit card rates, higher everything, higher prices for every product that we buy. And you might be, woohoo, I get a $5,000 check right now. Great, but a year from now when you're paying double for everything. I was downtown Chicago yesterday. Gas prices down there were $3.56 a gallon. Come on. So yeah, you get a free stimulus check, but you're going to spend that in gas next month. So today, Federal Chairman Powell comes out and speaks. He completely spooks the market, saying, "Yeah, inflation's going to go way up." And the thought process there was, when he says that, stock market crashed. Not crashed. It's down pretty good. I'm going to get to that. There's a little silver lining there. But it's killing mortgage. It's killing bonds, and especially mortgage-backed securities. So we got crushed today. It's what I would have thought if the jobs report tomorrow comes out like on fire. I don't think tomorrow's report's going to come in very good at all. Right now, I'm basically, I feel like I'm throwing darts in the dark because every analyst that I watch is completely confused. Every one of them. Not one of us is picking this thing or even giving you guys great direction. And I apologize about that. I pride myself on this thing. So let's get into it. Let me quit ranting and raving. Guys, I'm in a bad mood, so bear with me. The market. MBS's crushed. Okay, good news is here, we're not as bad as where we were last week. Okay, however, when we hit my trigger point right here, I thought we were going to be basically stagnant until Friday's numbers came out. But everybody is sitting on pins and needles, monitoring every piece of what somebody says. And the first inkling of inflation is going to raise havoc on the market. So we monitor this. Look, it's up 9 ticks today. We were on our way down to the 1.4 trigger that I thought we should or would hit. The reason why we monitor this, so those guys out there that are saying, Dan, you never talk about this, you say it doesn't have any impact on mortgage rates. It directly doesn't. But there's a trickle effect that this floats through. So let me explain this to you. If you watch my channels in the morning, when I talk about stocks and cryptocurrencies and real estate, I mention this, but let me mention it again here. Why everybody's spooked with the yields on the 10-year Treasury. So here's basically it in a nutshell. The S&P 500 has a dividend yield of about 1.5 to 1.6. So when you normally have Treasury yields at 0.4 to 0.5 to 0.9, you're looking at I can buy in Treasury a yield. Now I'm a financial planner. I'm not, but I'm saying I'm looking at this as a financial planner's side, and this is how financial analysts do it, as well as wealth advisors and everything else. They monitor what's my bond yields that I can get in an investment, and then what are my stock yields that I can get. So most of them watch this technical. They say, okay, bond yields and the 10-year Treasuries, what they watch is trading at 0.5 to 0.9. S&P 500 yield is about 1.6 to 1.7. So I can get 3 times my yield if I go to the S&P. So I'm going to invest all my money in the S&P, meaning stocks. Okay. What's happening is the Treasury yields are starting to go up. Now remember, Treasury is basically, it's U.S. Treasury, it's secure. You buy it, you forget it, you're done. You're going to get your yield for the duration of time you hold that mortgage or hold that note, and you're good. So when that trickles up, now we're equal to, or maybe even higher than the S&P yield. What you're going to see is people dumping stocks, dumping other bonds, such as mortgage-backed securities that we're going to go into, and buying treasuries, okay? Because and also another caveat on that is we have now what do I want to say politely? The new administration is pro-war, I'll just say it that way. We bombed Syria, did some other things, so that's spooking the markets. So when things like that, world events spook the market, you'll hear what's called flee to safety. That is U.S. Treasuries. So U.S. Treasuries everybody's buying them right now because of international concerns, our inflation, everything else. So as that trickles up and you have a higher yield in Treasuries than you do in the stock market, again, it's an S&P 500 dividend thing. I know stocks we're on the run, but that's it. So you're going to dump or start dumping things, other bonds and other stocks, and getting into U.S. Treasuries. Okay, that is going to create, issues, and that we saw that in today's markets. Stock market dropped, mortgage-backed securities, the mortgage rates went way up. So that's the backdrop of what's going on with yields, and you'll see a lot of headline news is the stock market dropped because of yields, or bond yields, or Treasury yields. That's the backdrop of it in its simplest forms that I can put you. So my thought process is Federal Chairman Powell's going to jump in and ease the market because they know this is going to play havoc on every aspect of the market, stocks, mortgages, everything else. Okay, so that's what's going on here. I didn't think he'd come out and say it and say, here, let me go back. I was just on there a second ago. Powell comments rock the market. Now that's what you're going to see. And basically he's coming back saying, you betcha we're going to have inflation. Okay, so then I would go to here, and I'll try to link this link down below so you can find out for yourself why inflation is kryptonite to bonds. And again, so let's go back to here. This bond, mortgage-backed security bond, is a bond that trades on Wall Street, that is has the biggest correlation or the biggest component of your mortgage rate. Okay, as this price goes down, this reflects the price of the mortgage-backed security bond. As it goes down, the mortgage rates go up. Okay, 56 is a pretty big move. We had a bigger move on Monday. We had another nice move Tuesday, nice move Wednesday. That's when we hit the trigger point. I thought we were basically in a very good position, and my concern was what was going to happen. Thursday or Friday was my main concern. Well, yesterday I think there was profit taking, and again there was news that trickled through that said inflation is rearing its ugly head. That is the number one key point right now. Inflation. So what you guys might say is, well, Dan, I don't care about inflation. I don't care about any of that. The Fed said they're not going to move. They're not going to do anything with interest rates. Well, there's basically one thing the Fed controls, and that's the federal funds rate. It has nothing to do with mortgage rates. The federal funds rate is basically interbank lending. How much one bank charges another bank. That's it. They control that. That's the only interest rate they have direct control over. Okay? So they can come out and say anything they want about the federal funds rate. Now, how everybody deems it is, oh, well, the Fed came out and said they're not raising rates. Okay, great. But that has nothing to do with mortgages. Nothing. And that's where people miss the boat. Okay, so that's why you guys that watch my channel, you're educated. You know what's going on with this stuff. So my thought process was, well, Powell's not going to come out and just spook the market saying, yeah, we're going to have inflation. I've been telling you guys for months we're going to have inflation, especially when this $1.9 trillion stimulus package got approved. It's going to create inflation. It's going to devalue the dollar. So basically, in its simplest terms, they're pumping out a ton of money into the economy. Okay, how do they finance that? Well, they just print bonds. So you're throwing a ton of money out in the economy. Guys, corporate earnings came out they basically finished up this week. 2020 was a fantastic year for corporations. Most of them had better earnings than they did the year before. So good news. The pandemic is depleting. We're at about a quarter where we were during the height of the pandemic. Great news. There's going to be a glut, and you heard it here. I've been saying it for months. There's going to be a glut of vaccines. We're seeing it now that everybody and their mother's getting shots. And then last night there was some news out that's saying the distribution channels are all messed up right now. But within the next 60, 90 days, we're all going to have shots. So what's that telling me? You got a ton of money out there. Now, household income, household savings, and household debt. Most of the people, the majority of Americans made the same amount of money that they normally make. Okay, just remember that part. Debt. The average American household has less debt today than we did a year ago. Okay? Savings rates, or the amount of money people have in savings, is more today than pre-pandemic. So what's that tell me? We have more money in our pockets, more money in our savings, less debt. Now everybody's going to have more money in their wallet right now. So now you have a good and service. You have a pen, okay? You're looking to buy a pen. The manufacturer can only make so many of these pens, all right? So you have a pen. If I'm making this amount of money, I'm willing to pay $1 for that pen because there's only so many pens. So supply and demand charts equal just basic economics. It'll put a price on this. There's an equilibrium on this amount of income coming in. That's how many pens we can sell at that price. Well, if incomes are going up for everybody, or the majority of people, because you're going to be back to work, you're getting stimulus money, you're getting all this money pumped into the system, people are going to have more money. So what's going to happen? You're going to have more money chasing the same finite amount of pens. So the price of the pen can go up to meet the equilibrium of the supply demand. So when the price goes up, that's inflation. And I'm going to click a video, or I'll link a video on here that CNBC analysts are explaining to you in their terms, and I want you to hear it from the horse's mouth, how inflation is kryptonite to bonds. And so again, my thought was, and I think everybody's thought was, Powell's not going to go in and spook the markets. Well, he did. And you saw the stock market crash. You see, well, not crash. I don't mean crash. It didn't go down thousands of points, but it is correcting, and it's been correcting on a daily basis. Look at the NASDAQ. It's down, I think, it's down about 5 or 10% in the last week. That's huge. Okay, so I'm sorry to rant and raven, but everything is just, it's getting really frustrating because all the technicals we watch are thrown out the door. You used to watch employment, unemployment, GDP, and I would even watch technicals such as freight indexes, corporate earnings, and all this other stuff. Nobody gives a crap anymore about anything. It's stimulus and the virus. That's it. Well, the stimulus package is through. The virus is starting to ease, and 90% of the stimulus package going out has nothing to do with the coronavirus. Nothing. And a lot of it is money being trickled in the next 2-3 years. So you might like that stimulus plan, and you're like, hey, kudos to my politician. He got that through for me. You tell me in a year or two if you're better off. You got that $1,000 check. 2 years from now, when you're paying $3-4 for a gallon of gas, let me know how long how far that $1,000 went. Sorry for the rant, guys, but I'm in a ticked off mood today because it's just political now, and it's driving me nuts. So let's get on to the rest of that information, because I want you guys to know what's going on the best I can advise you. So we ended the day down 56. Let me just show you something. Federal Chairman Powell talking right in here. Look at this. Tell me he didn't spook the market. Red means there's more sellers than buyers. It crashed. Good news in on this. Okay, so let me give you maybe a light at the end of the tunnel. We ended the day on a green candlestick. Now, what do we know about the green candlestick? Well, that basically means there's more buyers at that time than sellers. So here's my educated idea, I guess I'll put it that way, of what's going to transpire tomorrow. ADP came out on Wednesday with kind of a dismal jobs report. But again, I hold that's like having I really hold no weight to that, but at least it's an indicator that I follow. Today, 700,000 plus new jobless claims. So ADP had a lackluster jobs report of people getting jobs. Today we have $750,000, or last week we had 750,000 new unemployment claims. So the assumption would be, you don't have to be a rocket scientist for this, tomorrow's job report could be crap. You would think, okay? You would think. Also, if you watch my channel in the morning or my YouTube in the morning, I post, what's going on with all of this stuff. If you have all that supply going out there, what's it doing to the dollar? Okay, it's like, I had an analogy this morning, I won't go through it. You're throwing all this money out in the economy, that has to devalue the dollar. Anytime you throw a ton of stuff out there, you're devaluing that position. Meaning, let's say you have a stock and that company issues another 500,000 shares of stock. It diluted your position in that company. You used to have a 10% position. Now you have a 5% position in that company. You can see how it dilutes it when you add more supply, or you add more to that. So if you throw out a ton more dollars, you're devaluing the dollar. What's the dollar been doing in the last week? It's been going up. Guys, I don't get it. Everything is messed up. Because what the focus is in, stimulus, corona, and now inflation. It's bonkers. I told you for months, the stimulus package goes through, we're going to have inflation. The Federal Reserve saying, we're not going to change interest rates till at least 2023. Bullshit. They just came out today and said they're probably going to start changing in 2022. And everybody's like, oh, no, they said 2023. Guys, I can almost assure you, inflation is going to get out of control, especially if we have another stimulus 12 going out. And by the end of this year, they might start actually raising rates again. So that's how bonkers the system is. Okay, so all this stimulus stuff and everything, it's going to basically just screw up everything in our country. I'm just telling you as it is. So I am sorry to be dooms and glooms today, but sorry, every once in a while I have to just give you the truth behind things. All right, so now let's get on to the next piece of this puzzle, the daily wrap. How did things end up today? Well, the Dow is down 345 points. S&P closed down 51. Let's continue down this. So Powell's speech breakdown, speed of rates, rising rates are notably caught his attention. Inflation is set to increase, but likely temporary. If we do see inflation, we'll be patient. Commitment not to raise rates just because the job market is strong. Well, their mandates are jobs and the keeping inflation intact. So you can't tell me that you don't care about inflation and now you really just don't care about the jobs report. So what are you waiting for? The outlook to become more positive. What outlook? What outlook? I keep telling you, corporate earnings are good. Household incomes on average, and I God bless you guys that are struggling. I get it. But 80%, 90% of Americans, in all the reports that are going out, is we have more money in the bank and less debt, and the average person, the norm in the society, has equal to or greater income than where they had last year. Yes, there is pockets of people that are really suffering. I feel bad for restaurant owners, bar owners, entertainments, cruise lines, airlines. They're getting clobbered. Nothing that they did when you shut down the world. Those companies can't do anything. They can have the best management in the world, but if you shut down everything, you can't function. Okay? So let's get on to some more of this data, and I'll go over the facts that I gave you. Initial jobless claims, which measures individuals filing for unemployment benefits for the first time, was pretty flat at 740,000. Continued claims, so that's that. So that's 740,000. How is that flat? Okay, so I'm not going to rant and rave. I apologize. Let's go to the calendar. What's going on? Well, tomorrow the unemployment rate's going to come out. Guys, I'll just be honest with you. We're going to flip a coin on that. It should be dismal, but if it comes out better than expected, I would not be surprised on everything that's going on right now. Main news, this is something I'll post on all my social media here shortly. Mortgage rates surge after Powell comments. So I'll post this all over my social media. Click this and you can read a lot of that information going on. And then Yahoo, CNN, all those, CNBC, all those that you want to watch. You got the markets crashing, right here. Dow down 350, NASDAQ 1.1%, NASDAQ down 2%, Russell 2000 down 2.75%. Mortgage rates top 3% for the first time since July of last year. I don't even know if we were at 3% last July, but I'll trust what they're saying. U.S. Treasuries launched $9.8 billion COVID aid income lending. Come on, guys. Okay, I'm going to end it at that. Let me conclude with some good news, hopefully. Tomorrow, here's my expectations, and I think I just went over this. With all the numbers coming out, the jobs report should be not great. We should hit this because of the green candlestick, how we ended the day. Plus, I still think there's overreaction in all these parts. We should stabilize and maybe uptick a little bit, meaning rates come down a little bit. We locked everybody. You're locked. That's why I didn't post yesterday. I did the conference. I was doing video yesterday, and I spoke at an event. But I was concerned because I wanted to let you guys know what was going on. Behind the scenes, when I got home, I'm working on this. We're locking everybody and anybody we got. So if you're in our pipeline, I can almost assure you 99.99999% you're locked in. This is only going to affect those that basically they were on the fence teetering. Do I do it? So let me ask you this. If you're building, buying, or want to refinance, please reach out to us. I can't help you unless I know you need help. How do you do that? I'm going to show you that here in a second. We have an 800 number. We have a website. We have I think it should be added to the website today. There's a mobile app that you can use, and it's crazy. It's crazy, guys. You put in your application, you can follow your loan all the way through the process. Within 3 to 6 months, you'll be able to do everything on your phone. If you're watching right now, you're closing 3 to 6 months from now, it'll help you. But going in the future, our technology is growing on a daily basis, and we hope to be one of the premier mortgage companies in the entire country by the end of the year, competing with the big boys such as Quicken and all those other companies. We'll get there, I promise you. So how do you get a hold of me and my team? It's fairly simple. You go to therateupdate.com, and there it is. It just got posted. Awesome. If you want the mobile app, you click here and you'll get access to the mobile app. Here we are. There's our mobile app just popped up. You can click there and get our mobile app. If you're looking to you're like, you're like, Dan, I just want to get the ball rolling. Click here and apply. That'll get you started quick, but I highly suggest you use the mobile app. It is fantastic. If you're looking to buy a home and you're just like, there's a lot of uncertainties that I have, I would suggest you the one biggest thing is just click here. This will alert us that you need a call or an email so we can answer any and all questions you have. Guys, it is not high pressure sales. Think about it, us as your mortgage consultant. We compete against the big boys, but we work one-on-one with you to help you. We're not here to take advantage of you. We're here to help you answer all your questions. Hopefully you use us for your mortgage. That is the whole goal behind that. But there is no high pressure sales at all. I can promise you that. If you're looking to buy a house and you're like, I really don't know what I want to do, but I really don't want to talk to anybody right now, click this button right here. It's a funnel. It'll ask you about 12 to 18 different questions. Based on the answers that you give on those questions, it'll help me and my guys to put you into the right program for you. Same thing here on the refinance. So if you're looking for a refinance, you're like, I just don't know what I qualify for, or if the rate matters or whatever. Click here. That'll, again, based on those questions, it'll come back to me and I'll be like, oh, you know what? They need the FHA streamline, or they need the VA streamline, or they need this. So it helps me make sure I put you in the correct program for you. Best way to get a hold of us is give me a call. The 800 numbers, 844-775-LOAN. That's 844-775-5626. One easy way to get a hold of me as well is just email me. My email address is D for Dan, so dfrio@preferredrate.com. Another thing we just added to the equation is a calendar or a meeting scheduler. So you can go in here and say, you know what, Dan, I'm not available. You know, I'm tough to get a hold of, but can we schedule a 15-minute appointment or a 30-minute appointment? We shouldn't need a 60-minute appointment. So one of these should work out well for you. Just click in there. It'll show you my available days and times that I can help, and you'll be on your way. You'll get a confirmation back. You'll get text alerts saying the meeting's coming up and a whole bunch of other things. So we keep adding to our technology on a daily basis. I hope you like what you see. Guys, I want to say this one thing to you. I apologize. I don't mean to come off like a complete jerk today, but this whole thing really gets frustrating when you start putting in politics that are now affecting the mortgage markets, the real estate markets, mortgage rates, bond markets, and everything else. So I'll be better tomorrow, I promise you. So thank you so much for watching. Thank you for all the comments that you guys leave, and thank you so much for all the business that you guys are sending our way. So God bless. I'll see you tomorrow. Bye-bye.